Alright, so we had a little bit of a retracement overnight. Price moved back down to the bottom of the range for almost all of the indices, including the NASDAQ. But the NASDAQ created a new higher range the past couple of days, so it's kind of doing its own thing, like I said the other day. And yesterday I missed a bunch of opportunities. It just I didn't get, I was so close to getting picked up on this S&P order yesterday. It would have been beautiful. It literally by point 0.2 less like point 0.2 pips, like the spread. I couldn't get in on the spread in this thing. It drives me nuts when stuff like this happens and I miss out on such a clean, beautiful move. um, I don't know if I want to. I kind of have to see how momentum plays when it comes back up here, because it was kind of hovering around the 60 on the 15 minute, and it was probably even, yeah, I think I saw this on the 30 minute, or maybe it was 15, I don't know. It's probably 15. There where I wanted to take a stab at this. I don't know if I still want to. It is technically still valid according to my rules. I think it could work again, but it kind of depends on what kind of path the that price takes back up there. Um, if it starts making like a high, uh, that's obviously not a new high, but it's high, low, and it's just kind of staircase climbing really strong, then I might want to get out of the way. But if this just climbs like slow, like a slow and steady drip upwards, kind of similar to how it went down, then I might want a piece of it, because it's just not showing. It's like you're saving all of the sell orders for that are saved up here, right? The market's kind of doing that, which is kind of what happened um, on the overnight. There's lower volume and all that kind of stuff, of course, but it couldn't find buy orders for several hours, basically, and saw a little bit of divergence on at the 825 ish. I missed this part, but because there is a divergence that happened on the overnight, I'm taking it kind of with a grain of salt because, again, smaller time frame divergence. Uh, when did the divergence occur? It occurred during like Globex hours pre-market. So I have this buy order here, um, relative to the rest of the price action. It is a pretty decently sized stop. So I feel more confident about this one if it ever gets picked up. There's more room to breathe on the S&P, whereas on the US 30 on the Dow, it's tighter. Technically, I would have already gotten picked up if I left the set and forget order there, or even if I did like the 500 and the back and that is the backup, that would have already almost got me uh, a full sized win, right? A 3 to 1 $100 win. Um, other things that are frustrating is this setup right here. I had a sell on the 250, and this I got literally missed that by 4 points. It's just like, come on. um, what I'm looking at right now is a counter trend. Trend trading right now would be looking for sells as this pulls back. So I'm not gonna place anything right now because I already have sell orders that I missed at the top of the range, and I'm gonna leave them there, both on the S&P 500 and the Nasdaq. I have these orders at the top of the range that, again, I feel pretty good about given the information that I have, but if price action does something else, then I might want to get out of the way. Um, Now, Nasdaq, I kind of don't really want to have anything to do with it right now because it's kind of doing its own thing in no man's land. Russell is, of all the indices, the cleanest trend downwards, and you know, but I don't have yet another order here. I don't want to get over leveraged because that's considered basically over trading as well. Like if you if I have sets for sells on all four indices, that's not that's just as over leveraged as going four full contracts on one, like four times my normal my normal risk on one. So I have it on two. I like the one on the S&P because it has more room to breathe, right? Because I use these bigger stops, these bigger quarter stops on the S&P. Still, I'm not entirely sure if I'm committed to this size of a trade because it does take longer. But the move is still there. I haven't actually won a single trade on the S&P yet, if I recall my history correctly. So this might not be a good fit, but on paper, I think it is a good fit because it's the same move it's a 3-to-1 move with plenty of runway each time. I always check, is there enough room for this to go? And it would be. It looks like I missed the counter trend bounce completely here, but it looks like for in this example, if this got picked up, there's plenty of room for this to pick up a 3-to-1, maybe even squeeze out a 4-to-1, but 3-to-1 to be safe because there's, it's still within the range. So I'm always looking at it from that perspective, and there is enough room. I just am not getting, kind of unlucky. Not getting picked up on these winners. The ones that I do get picked up get stopped out by like a tick or two. It's really annoying. Next is okay. So if this continues to bounce up, I'm interested in what it does around the major quarter around here because this specifically for the Dow and maybe a little bit for the S&P, but more for the Dow. Right here, previous support becomes new resistance. That usually becomes true if you make a new low, which you kind of barely did. So you barely made a new low. A lot of times this is a fake. It's like, oh, I made a little bit of a new low, or you're gonna start selling now, and this retracement, this pullback, is just slicing up all of the novices that are like, oh, new low, breakdown, all these fundamental fears, banks failing, etc. Like, oh, it's time to short the Dow. That's what I think a lot of what's happening right here. There is room to go down, but you have to zoom way out to really see it. Like there's room to go down to the 30,000, I think, and even lower than that. But 30,000 will probably, that's such a huge number psychologically that it'll probably find buyers. It'll probably find buyers before that. But just saying, like there's enough runway that you could probably even get to at least like the 30,250, and then you could see a trend reversal. But the lows from last year are down at the 28,000 ish area, and a lot of people, my own workplace included, we're thinking like new lows, lower than last year's lows. But it's just a matter of the path we take to get there. And if there's going to be some kind of, I feel like the Fed has run out of moves to inject an artificial adrenaline injection or artificial resuscitation of the market. They've run out of moves. I don't know what more they can do, and now it's just a matter of controlling the bleeding, and so in other words, controlling the path down. So it's not like a global panic, We're already seeing bank runs and stuff. Not really a good sign for most people, even though a lot of people don't understand why that's actually happening. And it's kind of the bank's fault for being risky. It's not really necessarily an indictment on, well, it kind of is an indictment on the banking industry as a whole, but a lot of it is these individual banks just uh, being too risky and bad practices on their end, not on the system as a whole. But still, it is these are all individual cells of a bigger functioning organism, if you will. And so if one cell starts to fail, everyone else, the whole system does feel it. So it does impact everything. But um, I think that's the issue that we're finding right now is like it's choppy because we don't know what to do, right? A lot of the fundamentalists are going to be like, all right, world is ending. Um, Therefore, the market should go lower and lower and lower, like right now. And of course, in general, most people want to see that this is the bottom and like they want to see rates stop increasing. They're hoping that because of what happened, that maybe the Fed will stop increasing rates or something like that. So that battling, hope versus fear, light side versus dark side, um, is what's causing this range. But looks like the dark side has a slight edge because we're still in a downtrend by all measures that I can see. A little bit of ranging, then downtrend. A little bit of ranging, then downtrend. Like it's like a slow, steady downtrend. Most evident in the Russell right now. This would have already cleared. This trade would have already worked if I had it, like literally 30 minutes before I actually put it on. This trade would have worked beautifully. I don't know if it'll work again. We'll see. I'm expecting this 33,750 to hit, and I will take a look at the price action around the 750. I think it'll, like, this is, I'm just eyeballing it, but this is a 50% retracement on the Fibonacci ish. Um, maybe the 60, I forgot what the numbers are. Maybe the 66. Let me just pull it up. Yeah, so right around 750, it's the 750% retracement from this move here. If you want to take it from this move here, which I don't think is the right way to think about it, but it's like the 825 is the 50%. So you got the 50% retracement here. Usually, this is, after a strong move, even though it was an overnight move with low volume, it still kind of counts in my opinion when it's this big. And this 61.8 already got hit. Looks like it might move down. It could come back in and slice me up over here. It could, but I'm more interested in following the guidelines of the quarter strategy, which is look for it at the 750. So I'll look for sells over there. Look to re-engage, but right now I'm going to leave my top and bottom trades on at the top and bottom of the range.